Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, Elon Musk closes $6 billion financing for OpenAI challenger XAI, as well as that we'll be covering what faster trading styles will mean for US markets, as well as that we'll be covering what's going on the charts, as well as the economic calendar. So make sure you stay around to the end so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with Elon Musk and his financing for OpenAI challenger XAI. Now, Elon Musk has now closed on a $6 billion funding round for his new AI startup named XAI. This comes in a move which now values the OpenAI challenger at $18 billion. Now, this is of course a very interesting topic, which really we've covered very recently on the channel with, I believe, last week as already covering this topic of financing, but ultimately at that time this financing round of course had not been completed and was certainly in progress, with Elon Musk kind of being on a trip, or at least being on this financing round, going to different investors that he of course knew to try and get this investment that he needs to kind of challenge key competitors within the AI space, as ultimately Elon Musk is of course someone with a great deal of ventures, someone that's very rich and obviously has a great deal of connections through his network. And as a result of that, this new kind of startup of his, XAI, has required a great deal of cash. As we've covered many times, these AI startups require a great deal of investment just because of the infrastructure required often to develop new language models. And as a result of that, Elon Musk is harnessing his network and looking for that great deal of investment that he of course needs to develop this new AI startup. But ultimately, we've been covering this AI revolution greatly, which of course Elon Musk is now heavily cementing himself into and really trying to take a stab at being a figurehead within this kind of AI revolution. Now, with regards to the AI revolution and the key competitors and what's been happening recently, of course, we've been covering the kind of different attempts by these large tech giants to establish their own winning, the kind of AI revolution by establishing their own language models, which compete with, the other language models on the market, with the likes of Google, Meta, and, Microsoft, of course, being those key names to note, which have been developing these better language models than others and really have the most investment so that they can develop these better language models. But also we've covered the kind of recent developments with certain less kind of competitive kind of people or firms, within the space, such as Apple, which traditionally we might expect to be a strong kind of powerhouse within this industry, someone or a firm which would kind of be able to establish a great deal of presence within the AI space, simply because they have a great deal of kind of access to consumers through their Mac products, as well as a great deal of data from their Mac products as well. And so many, of course, expected Apple to kind of cement themselves into the industry, as we've already seen with other tech giants. We really haven't seen that though, and as a result of that, shareholders have kind of become quite tired with the lack of progress seen by Apple, and have become annoyed at Apple for the lack of progress seen. And therefore, Apple recently has invested a great deal of time and money into developing their own AI team and developing new kind of places where they can develop new technologies and that kind of thing with regards to AI. And that's been very key in the area of Zurich, of course, where they've acquired 2 new AI startups, which of course will be added to their kind of team and their portfolio to help develop a new language model, which they can then course incorporate into their Apple products. So that's kind of been the key effort by Apple. But the reason I note that is, of course, that's been a more recent attempt by a key tech firm to kind of establish themselves into this very competitive industry, which is, of course, the kind of AI language model space. And here we have, of course, Elon Musk trying to kind of do the same. Whilst Elon Musk may possibly even have a better access to this kind of industry than someone like kind of company like Apple. Ultimately, Elon Musk is competing with the best of the best, and of course, OpenAI, backed by Microsoft, is currently leading the way. And whilst Elon Musk has of course had his own relations to OpenAI in the past, Elon Musk is now separated from that venture, and so now he is kind of building this new AI startup to kind of put himself in the space and possibly even win this kind of AI revolution, this race to produce the best AI language model. But of course, the great deal of financing that's required has led Musk to go on this kind of investor tour, which has now allowed him to acquire this $6 billion required for the startup. With this also coming in an act by investors to create new challenges to the powerful and dominant OpenAI, which is openly winning the AI revolution race. XAI is only a little more than a year old, and this latest round of financing now places the startup in the richest tier of rivals to Microsoft's OpenAI, which in comparison has raised more than $13 billion in funding. XAI now ranks alongside Anthropic financing-wise, who has raised more than $8 billion. The topic of Musk, AI, and this new venture of XAI is interesting since Musk was the co-founder, of course, of OpenAI before he split with its CEO back in 2018. The latest round of investment for XAI includes investors from Musk's most loyal camp of backers, including Kingdom Holding, Valor Equity, Sequoia Capital. Such investors had also backed Musk's $44 billion acquisition of Twitter back in 2022. This XAI venture also includes Musk's chatbot Grok, which is designed to fit seamlessly into X, formerly known as Twitter, which the new AI startup has great access, will enable, of course, this new AI startup to have a great deal of access to a great deal of data for training purposes, as well as offering the AI language model a great deal of customers. Assembling a strong AI developer team and harnessing the adequate computing power for the training of large AI models is very costly, however, with key tech giants all competing to expand their AI capabilities and in the process investing billions. So this, of course, is a very interesting article on a very important topic to kind of understand and keep your wits about you with regards to this topic. And so it's interesting to see that Elon Musk has now closed on this round of financing, and it'll be interesting to see now what Elon Musk can do with his new AI startup, which is a very new startup with comparison to other kind of AI in comparison to others in the AI space. I'm really not with it today, it does seem. That's all to talk about in this article, though. Next article to talk about is to do with trading cycles and what that might mean for US markets. Now, the US will now shorten the time that it does take to finalize the millions of trades made. This comes in a move which will have repercussions for banks and asset managers around the world who trade the world's largest capital market. With this move also being joined by Canada, Argentina, and Mexico, the move will also cover stocks, corporate bonds, ETFs, mutual funds, and even options. And the move will ultimately force the fund managers of the world that trade any North American securities to be more efficient at settling their trades. Previously to these changes, traders were allowed 2 days after a deal is executed to finalize it, allowing the buyer and seller to deliver both the money or the goods. This window will now be shortened to a day instead of the 2 days before. The catalyst for such a change was several bouts of wild market swings, such as the early days of the pandemic, as well as the meme stock rally back in 2021. This will force brokers to speed up settlements and reduce funds for collateral. Now, of course, whilst this isn't really a topic that we would usually discuss on this channel, I thought it was very relevant to kind of what we're talking about every day, because ultimately this will have a great effect on the way capital markets do move, well, more specifically, of course, the North American capital market. So this will be very important to how, kind of transactions take place within US markets, and also how kind of brokers set up their own kind of trading conditions, as of course, the kind of ability to now of course now the kind of lack of ability to extend out kind of transactions to 2 days forces these firms to be more efficient, and forces these firms to will enable these firms to reduce the amount of collateral, or the funds that they do hold for collateral, which was a kind of key point, of course, during the GME short squeeze, which I'm sure many of you can think back to and remember, which did see, of course, Robinhood halt trading for, kind of GameStop and AMC assets, as ultimately the kind of volatility was just not being able to be processed by Robinhood, and the kind of settlements and that kind of thing, the kind of closes and the settlements financial wise were just not able to be processed by Robinhood, and that's why we did kind of see the halting within the market. And so this kind of attempt by the kind of US market regulator to ultimately shorten the trading cycles will hopefully help reduce settlement risk, but then again, it could of course cause those headaches for overseas investors, as this article does note. So a very interesting article there, covering that important topic with regards to trading cycles and markets as a whole. That's all to talk about on the charts, though. Next to talk about, like always, is of course the charts, where if I can did I say that's all to talk about on the charts? I meant, that's all to talk about on the articles. I'm really not with it today. Pardon me for being so tired. But like always, we are, of course, beginning with the Dow Jones, the US 30, more broadly, of course, covering the topic of US indices. Of course, this is a very interesting asset to kind of start off with, like always, because ultimately price had made its way down to this key liquidity zone ending off last week. Last week for the US 30 and other US indices was very bearish, with price just kind of pushing to the downside, yes, reacting to these kind of key liquidity zones and kind of moving to the upside after reacting to them, but ultimately the kind of overall market sentiment remained bearish, and as a result of that we saw this sell-off continue, and we saw the markets kind of just push to the downside, and that's why we now see price kind of down and around that $90,000 level, which was of course not seen also until last seen back on the 9th of May. So this kind of retracement has been very significant indeed, and this was of course influenced greatly by that FOMC minutes that we did receive last week, which did kind of paint this more hawkish picture. Oh my gosh. Which did paint this more hawkish picture for markets and the Fed's monetary policy. And so as a result of that, investors priced that in, and therefore, the US 30 really did see a significant sell-off. As we did start off the week, though, as I said in yesterday's morning market briefing, I did kind of mention this area of liquidity that price was just sitting above, and I did note that this area of price could, of course, act as a significant area of bullish support, and therefore price could very much move into this area of liquidity, react to this 50% Fibonacci retracement level before price then continues to the upside, as in the long term US indices of course still remain bullish, but on the short term of course we have had this kind of bearish sell-off. So that's why I did mention that area as a key zone for price to interact with. That's also about on the US 30. Still not many developments of course on the US 30 since yesterday, but still this area of liquidity remains important to look at. Next to talk about is of course the dollar, which has continued a move lower, not in a significant fashion, but has continued this move lower nonetheless. Now, ultimately, price last week for the dollar really didn't do too much of significance, with price kind of moving up at the start of the week, but ultimately ending off the week by selling off back to those levels, seen on, well, very much close to what was already being seen at the start of the week on Monday. So overall, not much happened for the dollar last week, apart from this move to the upside, then move back down to the downside. In the process of those moves, though, price did breach above this key liquidity zone and near that 78.60 Fibonacci retracement level, from where price then was able to sell off. As we started off the week, I did note that there was this chance now that price had reacted to this area of liquidity, that price could continue this move lower, and therefore we were kind of looking to the downside and looking to this minus 27.2% Fibonacci retracement, Fibonacci extension level as an area which price may interact with in the future and make its way down to. Of course, we haven't seen that just yet, and in yesterday's price action, whilst price did move lower, we really didn't see much significant price action, and therefore it's hard to tell where price could be going. Nonetheless, keep your eyes on the dollar. As for Euro USD, once again, not much can be said, with price interacting and reacting to that 50% Fibonacci retracement level last week, but ultimately not making a significant run to the upside as we do start off the week. As in yesterday's morning market briefing, or weekly market briefing, I should say, I did kind of note the fact that because price had interacted with that 50%, it was likely that price continued to the upside to reach that kind of Fibonacci extension level and key liquidity zone. Ultimately, though, ending off last week, we were starting to see this kind of hesitancy in price as price was interacting with this key liquidity zone, and as we started off the week, that's kind of been repeated or has remained constant, and so it is hard to tell where price could be going from here. Next to talk about is pound yen, which has now made significant headways in price, with price breaching that 200 yens per pound level, which of course very, very, very significant, and marks kind of this uncharted territory, which was last seen, of course, back on what was the exact date? I believe, I think the start of Monday, so possibly the 29th of April, when that great deal of volatility was taking place for pound yen. Of course, though, price is now nearing a break above that key level, which price did not actually kind of stay at when we saw that great deal of volatility, and now price is potentially going to breach that level. So it'll be very interesting to see how far pound yen can go before we do see somewhat of a pullback, because at those levels which we were suspecting a pullback at earlier on Tuesday and Monday of last week, we really didn't see a pullback at all, and we just continue to see this climb to the upside. So we still waiting to see that kind of retracement, which one would expect, and price seems to be happily sitting at that 200 yen per pound level. So a very interesting time for pound yen always. Next to talk about is Bitcoin, which is hanging around that $70,000 a Bitcoin mark for the moment, and yesterday price interacted with that level in a very significant fashion, with price bouncing off this key liquidity zone that we've previously noted in yesterday's weekly market briefing, and bounced off that level before reacting to that $70,000 a Bitcoin level, and price sold off then from that area of price level to the downside. So a significant sell-off there for Bitcoin, but ultimately Bitcoin's still holding around that $70,000 per Bitcoin level. So interesting times for Bitcoin as well. Next to talk about is of course gold, which, like as expected, has now reacted to this key liquidity zone after a great deal of bearish momentum last week, which we did of course cover. That great deal of bearish momentum caused price to break through this key liquidity zone and move throughout this entire range in a very fast motion before ending off the week around and down near this liquidity zone and reacting just slightly to it. Now, starting off the week, we noted that there was a great deal of chance that gold would now continue this swing back to the upside after reacting to this level, and could then either range around this area or could of course break then again above this key liquidity zone and move once again to the upside. We haven't seen, you know, this kind of completely play out just yet, but we have seen a move to the upside take place, so it will be interesting to see what does happen from there. Lastly to talk about on the charts is of course oil, though, where not much can be said. Price is continuing to the upside though after reacting to this key liquidity zone at the bottom of the market last Friday. So it'll be interesting to see whether we can see this move continued with, you know, the kind of bullish momentum continuing to play out. That's all to talk about on the charts though. Lastly to talk about is the economic calendar, where we are receiving quite little data, to be honest with you, and not that significant of data, but there is some key points to listen out for. Firstly, we're receiving the Aussie retail sales figure, as well as the US house price index figure. Followed by that, we're receiving the US consumer confidence figure, which is really the most important figure of the day. But also we're receiving numerous Fed official speeches, so still lots to listen out for and lots to kind of look out for on the charts. We've got lots in the articles though, lots in the charts and lots in the economic calendar. Sorry for being so tired today and not as much with it, but I hope you have a great trading day. That's all from us at Wildwood Capital. Have a great one. See you later. Bye.